I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have Conor Ryder, the head of research at Ethena. Conor, welcome to the show, and thanks for taking the time.
Great to be here, Ashton. Thanks for having me.
Likewise, excited to dive into Bitcoin, the crypto markets, ETF approvals in the works, we're hoping. I think that's really causing a stir up in the markets. I know you've been doing your research on that. We'll also dive into stablecoins, DeFi, and a little bit more of the intricacies of the crypto markets in the latter half as well. So excited to dive in. I'd love to start off our conversation with just hearing a little bit about your background and your current works in Bitcoin and the markets, and then we'll dive into all the latest details.
Yeah, absolutely. So yeah, my name's Conor. I lead research at Athena Labs. I got into crypto initially probably in 2017, 2018, when I had my job in TradFi. So I was working mainly for a pension fund, and the people you're talking to there are about as far away from crypto as you can imagine. And you're talking to their portfolios mature in 50 years time and hold fully bonds, let's say. But on the side, I was just super interested in this asset class that was growing, and got really into crypto then. And then, yeah, over the lockdowns again, got super into it with all the spare time we all had, and decided to kind of align my career with crypto and my passion. So I joined Kaiko, who were a crypto data provider, and I sat in the research team there for a couple of years, researching stablecoins, exchanges, derivative markets, a bunch of different things. Super interesting job. And a super interesting time to be in research as well. It was the back half of that was around the 2022 bear market and the Terra collapse and FTX collapse, and you kind of, obviously crypto was kind of falling apart, but you never had things to run out about from a research point of view. So really interesting job, and got to touch on a lot of kind of broad topics there. And then yeah, about 6 months ago, I joined Athena Labs probably as one of the first hires, kind of aligned with the goals of building out this DeFi stablecoin that can stand on its own 2 feet, which I'm sure we can dig into later. But yeah, that's the rough background anyway.
Very cool, and that's quite the transition from bonds to Bitcoin, and I'm guessing it's a little bit more exciting right now, especially with the recent news for the ETF and the market moving. And I'm guessing you took a little bit of that financial history background and applying it to the crypto markets. I'd love to hear your take on sort of what's happening right now in the last couple months here, and since that announcement. It seems like the crypto markets are now heating up again.
Yeah, definitely. There's a sense, I think, that the animal spirits around crypto are back, and sentiment is definitely improving a bit. I think that probably started, or at least this kind of recent bull run that we've seen has been from, I guess it boils down to that fake Bitcoin ETF news that we saw. And I think what that showed was that a lot of people were two things. Basically, one, basically on the sidelines and not allocated enough to crypto, but two, also caught on the wrong side of the trade. So we saw people on the wrong side of the trade because we saw just a massive amount of short liquidations. And that was a reason for basically one of the big run up we saw. We saw big positions being built up in derivative markets on specifically like Deribit, where you had positions being built up where people would sell options, and selling options is a play when you're not expecting much volatility in the markets, which has been pretty profitable for the last 6 months. Markets have been quite flat, and you were able to gather those premiums from selling options. But what we saw then when this like fake Bitcoin news happened, and people started then to realize they were maybe caught on the sidelines a bit and started allocating to the space a bit more, we saw then those short calls had to be covered, and you do that by kind of buying spot and buying perps again. And basically that kind of led to this kind of run up we're seeing. We saw people, we saw about 300 million of short liquidations in a matter of days. And we saw then funding rates, which is a measure of the kind of sentiment. It's the measure of the demand and supply, demand imbalance between short and long positions. We saw long positions paying a fee of about 30% annually to go long Bitcoin and long Ethereum in the past few weeks, which is more than we usually see. Normally that's around 5%. So we're seeing a definite kind of improved sentiment in crypto markets. And I think that, as I said, that fake Bitcoin ETF news was part of the reason for that. And I think that 8% pump up and down kind of showed people that maybe when the real news comes out, that they need to get allocated to crypto and they need to take part in those 8% gains, because a lot of people like me probably thought that was priced in already. It seems to be, the consensus seems to be that those spot ETFs are all but approved. So you'd imagine that would have been priced in, but that fake news showed us maybe that it wasn't. And I think in the time since that fake news, we've seen people kind of allocate more towards the space, which has led to probably the improved prices we've seen lately.
Yeah, great insights. And Yeah, the news, it bumped the market up 8%, and then it sort of dropped it back down to where it was within the hour of that this news isn't really real. But then since then, we've seen an over 20% gain of Bitcoin sort of waking up, and there's a lot of different ETFs that are in the application process about to be approved. There's a bunch of different dates thrown out there. I think some even in November, also in January and March seem to be sort of the main final deadlines that people are expecting. The percentage chance is like 95%, or at least that's what the estimation is. So it's a matter of like when, not if. Do you have any insights into how you can prepare or how you can best capitalize on this opportunity right now?
I think simply put, allocate to Bitcoin, allocate to the majors at least, because what we see is normally that the majors start a rally and then the altcoins follow. So what you'd want to do is obviously get allocated in advance. And I think if you asked me 2 months ago, I would have said maybe you're even too late already, because as you said, the consensus was 95% that this was going to happen and this would be approved. So then like it should be priced in really technically, but we kind of know now that crypto markets are a bit inefficient, and there was never a better case in point for that than that fake Bitcoin ETF news. And as I said, we saw that increase 8%. So that just shows you really, you just kind of have to allocate over time to this asset class. It'll go up and it'll go down. But when there's something on the horizon, like a tailwind, like this spot ETF approval, I think it's fairly obvious that, you probably need to get allocated in advance of that now. And we know that the studies are there that financial advisors that they really advise their clients to invest in ETFs. I think I saw a study that about 80% of financial advisors' assets under management go into ETFs. And we know there's demand there from clients to go into crypto assets as well. So we're just going to see, hopefully, this huge kind of influx of capital into the space. And yeah, it's about just basically not being on the sidelines when that happens.
Mm-hmm. Yeah, and it seems like Bitcoin sort of they say it's the rising tide that lifts all boats, and we haven't seen it across the board, but it looks like some of the other cryptocurrency markets are starting to wake up. Specifically, Solana and Chainlink seem to have a lot of action, maybe leading the pack. When you say looking at the majors, are those some of the other kind of projects that you mean, or maybe the top 10 or 20 market cap projects?
I would say quite more narrow than that. Yeah, when I say majors, I really think I've just referred to Bitcoin and Ethereum. In crypto, if you looked at the top 10 a few years ago, it looks kind of different. It's as I said, it's still an inefficient market class. So if you're really looking at it from like an asset allocation perspective, and you're maybe splitting it between majors and like blue chips, it's really you can only have confidence in the blue chips in being Bitcoin and ETH. Anything else really is more like a volatility play, and you take probably a smaller exposure, but the gains could be bigger. So yeah, when I say majors, I would more refer to Bitcoin and ETH, and that's what the data shows. But yeah, as you said, the altcoin, the rallies tend to follow in the altcoins after Bitcoin and ETH lead the way. So we're starting to see that now with Solana, with Ripple now today. I think even we're seeing that with Chainlink as well. And there's a lot of bullish news coming out of all those projects as well, which is encouraging. And that comes back to probably now sentiment is improving. We're starting to see more eyes on the space in general. And these announcements are probably going to flow into the new year, hopefully.
Mm-hmm. Okay, that's good to know. And there's a lot of people that are just Bitcoin, and they sort of separate Bitcoin from crypto. But there's a lot of people as well that understand the value of Ethereum, and I'm glad that you mentioned that. And there's sort of this mini battle of like, which one's gonna perform better. And of course, they have different use cases. Ethereum's not just digital money; it's a whole world computer. And for that reason, people see a lot of potential in Ethereum, and also the fact that the market cap is a lot lower than Bitcoin. It could have the potential to rise more. But looking at the Ethereum when priced in Bitcoin, the Ethereum Bitcoin trading pair, over the last year or even more, that has only been in a downward trend, and it seems like Bitcoin is continuing to outperform Ethereum. What's your take on that, and do you think it will turn around for any specific reasons?
Yeah, it's hard to say. I would say that trend we've seen lately is probably more to do with just the fact that we're in a bear market. And again, you see people in a bear market rotate into not only the majors, but also probably into stable coins as well. But if you hold one of these altcoins or hold even Ethereum, you see then sometimes people just rotate back into Bitcoin during a bear market. And I guess it's safe to say that DeFi as a whole over the last year has been kind of suffering from a lack of activity in the space, a lack of interest in the space. The theme of, I guess, 2022 as well was just liquidity being, and 2023 liquidity being pulled en masse from the space. We saw a collapse in crypto lending. We've seen market makers leave the space. So there's just generally less liquidity, and more institutions are less willing now to kind of lend the capital that's needed for DeFi to run. But we're starting to see that come back to the space now. And as I said, it's this bullish sentiment is starting to pick up. And even personally, I've seen kind of institutions are a bit more interested now in putting money into DeFi, which in turn should be able to help kind of the price of ETH and just support the whole ETH ecosystem, because really ETH is more of an ecosystem than Bitcoin. And same with the altcoins, they really need that liquidity there to really support the token price and the valuations of a lot of those projects. So I would say, yeah, if you're asking me, gun to my head, what I think for next year, I would say that might flip and ETH might outperform purely based off of hopefully this like bullish sentiment returning to markets and more of that liquidity returning to the Ethereum ecosystem.
That's great insights. And you mentioned earlier on about the open interest, and you were saying, in the derivatives markets, you can look at the contracts and sort of maybe it tells a bit of a story of what people are thinking and what's to come. I'm curious if you have any insights into, now that Bitcoin has risen up, the next stages of flowing deeper into crypto, if that story is able to be foretold through open interest or funding rates, or looking into the derivatives markets.
Definitely, yeah. So even already, like in the last couple of weeks, we've seen the derivative markets in terms of daily volume. They've passed not only their 2023 levels on averages, but also their 22 and 21 levels. And those 22 and 21 levels were pretty heightened as well. Like we saw the derivative markets grow, I think like 6 or 7x over the space of a few months in 2021. And we're starting to see that that's nearly the first sign that sentiment is, bullish sentiment is returning, is when you see derivative market interest pick up. Because that's where I guess a lot of traders go to place their either long or short bets. And open interest is another indicator of that as well. That's up in the last few weeks. As I said, then that's probably people looking to get allocated to the space in advance of some news coming out, and maybe just allocating towards before the end of the year, and just getting their positions in line, I guess. But we've definitely seen that pick up. As I said, funding rates is another great indicator of bullish sentiment and long demand, and that's increased. As I said, that was up near 30%. Longs were paying shorts for the privilege of being long, basically, which is super interesting as well. So yeah, derivative markets are definitely telling a few signs there, and that sentiment is picking up, and interest is picking up as well.
Great insights. And I'm curious on your thoughts moving into 2024. There's leading up to this potential event of the ETF approval, but it's also a halving year as well. Looking around March or April, Bitcoin's expected for the supply to cut in half for the new incoming supply. I've spoken to some major companies that are holding, hundreds of millions of Bitcoin, and they're preparing for that event, but I feel like it might be overshadowed by the ETF news. And in terms of price action, that's something that we know 100% is going to happen. We don't know the specific day, depends on the block, but the ETF is sort of the main event for the price action. What do you think about those two events and how they relate?
Yeah, well, I wouldn't say they're like mutually exclusive. I'd say people, as I said earlier, it's a matter of like tailwinds for the space. And this is just yet another tailwind for crypto assets and crypto prices in general. That being the halving, like we've seen in other halving cycles, as I'm sure you've probably talked about ad nauseum on the podcast, but we've seen crypto asset prices improve around the time of a halving. So that's just another tailwind. Another one you can add in is the potential. We might actually be at the top of an interest rate environment now. Like we could see interest rates being cut next year. That's another tailwind. So all of a sudden you've got like sentiment picking up a lot, and the outlook in 2024 really picking up for crypto assets, which paints a positive picture. And hopefully I'm not biased in that sense, but they're just the facts. Like we know the halving is going to happen soon. We know hopefully that this spot ETF is going to be approved soon. And then the hope is that interest rates will be cut at some stage, maybe next year or soon after. So you've just got a lot of things kind of pointing in the right direction, and this perfect storm that was building. And people like myself were saying this for the last couple of months, even in advance of this fake ETF news. And as I said, I think that fake ETF news really kind of opened a lot of people's eyes. And they were like, okay, maybe this asset class now can spike 10% in a day again, because we saw for the last 6 months, it was just going sideways. And that's why people want to be allocated to crypto, is for the volatility, really. They want to be able to allocate from a TradFi perspective. Maybe they want to be able to allocate like 5% of their portfolio to it, to get exposure to that asymmetric upside. And now the last few weeks have shown that that's kind of back for crypto.
Mm-hmm. And on the DeFi side and the stablecoin side, I know you have expertise in there. From what I understand, throughout since the peak in 21 and through 2022, as we were in a bear market, more people are allocating to stablecoins. And if they were doing DeFi, it was just to get their 5% interest or whatever it may be on a stable coin, and now potentially they may be moving those stable coins back into Bitcoin. What do you think is going to happen with the stablecoin market as Bitcoin starts rising here?
Yeah, that's a really interesting question. So I think definitely people will move some of their allocation maybe from stablecoins and into like more volatile assets. That could easily happen. But one trend that I could see happening is a move away from these more centralized stablecoins. That really the business model there for centralized stablecoins is kind of broken at the minute. If you ask me, it doesn't really make sense. They pay out zero yield, and they internalize all that yield, and we see Tether and we see Circle are some of the most profitable companies in the world now. I think Tether in a quarter earned over $1 billion in assets, and it has like around 50 employees, and per employee, it's one of the most profitable companies in the world. So they just internalize all that yield, but they externalize all the risk out to users of a risk of a DPEG and everything like that. So I think if you were to ask me like what the trend is, maybe for 2024, it might be a move away from those centralized stable coins that we've gotten so used to, and they kind of proliferated around DeFi and CeFi. And maybe more towards a model of yield-bearing stablecoins and yield being shared with the users, because we've seen stablecoin supply on a decline this year, and I think a big part of that reason is because people are rotating into bonds even that pay 5%, and it's kind of the question: why would you hold a stablecoin that earns 0%? With a lot of probably inherent risk in there potentially with some of these centralized stablecoins, with DPEGs and everything, where you could potentially just rotate into bonds that earn 5%. So it's a case of now crypto trying to match that 5% yield that's on offer in TradFi to become more competitive and start attracting more liquidity back to the space.
Mm-hmm. That's a good insight, because I feel like people need to know more about stablecoins and the right asset, because all stablecoins are slightly different in the way that they're backed, even those centralized ones, and there's a lot of decentralized ones that you know about as well. Because when the time comes, when Bitcoin is crazy oversold and hopefully hundreds of thousands of dollars, people are probably going to want to move that back into stablecoin, and they're going to want to know what's underlying of that asset, and is it the right stablecoin that they're using? Are they using the best one? Maybe you could talk a little bit about the difference of those centralized ones versus the decentralized ones, and also what Ethena Labs is working on.
Yeah, absolutely. So yeah, the centralized stablecoins essentially hold bonds, they hold cash on hand. So essentially just US bonds, centralized assets, and a centralized issuer issues the stablecoin. So that's obviously quite reliant upon traditional banking infrastructure. And then you look more towards the recent like decentralized stablecoins in quotation marks. And a lot of them have kind of onboarded bonds as well lately, or centralized stablecoins, in an effort to kind of comes back to be more competitive with that 5% bond yield. So we've seen a few different stablecoins now, yeah, as I said, onboard real world assets that yield 5% and make their stablecoin more competitive. But yeah, it kind of comes back down to like, what are we trying to do in DeFi? Really, we want that foundational stablecoin of DeFi probably to be outside of the traditional banking infrastructure and not reliant upon any centralized entity, not reliant upon, like have no censorship risk of those assets as well. Because we don't want someone to come in one day and just flip a switch and then all of a sudden stablecoins DeFi run on are all of a sudden censored, and DeFi, DeFi is kind of screwed in that instance. So at Athena Labs, we're essentially trying to build this this new kind of digital dollar, let's say, that's backed with crypto native collateral. So we use staked Ethereum as the collateral backing that stablecoin. And then we hedge that price exposure of staked Ethereum on derivative markets so that the two positions offset each other from a P&L perspective. And at the end of that process, you get this tokenized dollar that can essentially also earn a yield, as I was talking about earlier. The yield on the asset, staked Ethereum, earns about 4 or 5%. But then also historically, you've been paid to go short Ethereum perpetual futures, which is the hedge side of the trade. And that earns about 6 to 7% on average annually over the last 3 years. So that's something that could be yielding double digit percent while using crypto native collateral, which is super interesting as well, because as I said, that's hopefully censorship resistant. And it also kind of rivals the bond yields that we're seeing in traditional markets as well. So we're hoping what we're building is going to lead to that. Pushing the boundaries, let's say, of kind of more of a shift towards yield bearing savings assets in crypto. Hopefully we're kind of pushing those boundaries and helping DeFi move away from the censorship of assets more towards being, I guess, more self-sufficient and censorship resistant.
No, that's great to know. And from what I understand with DeFi, even when you're in a bull market and everything's moving up, stablecoins are very important to DeFi, because normally if you're doing liquidity provision, there's going to be 2 coins, and if you want to mitigate your risk, one side of that you're probably going to want to stick to a stablecoin, even if the assets are going up, because otherwise it can be risky with different other risks are involved if you don't use stablecoins. So there is sort of a use in bear markets and in bull markets as DeFi continues to grow.
Yeah, 100%. And then, so as you touched on it, exchanges themselves, they don't want to be overexposed to, let's say, a Tether or a Circle, just in case they blow up. They want probably something that has more of an uncorrelated risk profile. And we're not saying obviously 100% needs to be in these DeFi stablecoins, but definitely a percentage of their order books probably need to be in that stablecoin. So they're just less concentrated on USDT and USDC. We saw in March of this year when Circle had their issues with SVB, and that could have turned badly for them. And so definitely a diversification of assets helps for exchanges and entities all around crypto in terms of stable coins. And then, crypto as a collateral asset within DeFi as well. We see a lot of projects running on, again, centralized stablecoins, and just these things that have, I guess, correlated risk profiles with traditional banking infrastructure. And as I said, we want to build something out that has uncorrelated risk profiles, and be more, I guess, make DeFi more independent and self-sufficient. And that's what that boils back down to. So right now it's pretty fair to say that DeFi kind of runs on these centralized stablecoins. I think something like 70 or 80% of volumes on DEXs, on decentralized exchanges, involve a centralized stablecoin in the pair. So we need to kind of flip that and make sure that's maybe more down towards 20 or 30%, and that DeFi can still run on decentralized stables.
Yeah, and with that transition into more decentralized stablecoins, there has to be some point where there's a pivot, because a lot of the times, people are looking to trade a coin and they say, okay, well, the top trading pair is USDT because it has the most liquidity and it's on a lot of exchanges. How can these decentralized stablecoins sort of grow their market share so that they can, compete with the ones that are already listed everywhere and have liquidity, and people want to, they may not agree with what are the underlying assets of the centralized coin, but they're sort of forced to use it to not have those spreads and lose money?
Yeah, I think probably 2 things. The first of that being the yield, which I've talked about. So the benchmark yield to beat for Tether and Circle is 0%, right? They don't pay a yield. So hopefully DeFi stables can start offering a yield that beats that. That can not only beats that, but I guess maybe it's fair to say the benchmark yield is 5% for traditional bonds. So with DeFi yields need to just be elevated across the board and beat that 5%. And then if we do that, we'll start seeing an inflow of liquidity into the space and the shift away from centralized stablecoins to more decentralized stablecoins. And then also we need to build out the use cases for decentralized stables. We need decentralized stables to be used as a collateral asset throughout the board. We need DeFi stables to be used on centralized and decentralized exchanges. And as I said, everything I've said so far, hopefully the exchanges and different use cases, hopefully the protocols behind those can see the use case there. As I said, they want something with an uncorrelated risk profile. They want something that can hopefully earn a yield that's crypto native versus reliant upon bonds and everything. So essentially it's 2 things: yields and building out those use cases. And I think that DeFi will be kind of all the better for that, and hopefully that happens sooner rather than later.
Yeah, I appreciate all the insights on your expertise in stablecoins and DeFi. I feel like as Bitcoin continues to grow, people are going to become more interested in DeFi and what's current and where it's at. And these are very important points to know. For people that want to learn more about the decentralized stablecoin and just what you and your team are working on at Ethena Labs, what's the best way to dive into that information more?
Yeah, so I think the main spot is the Twitter at Ethena_labs. We'll be coming out, and we have done, with a lot of data surrounding different things there with the funding rates and different risk exposures. As a team, we're trying to be as transparent as possible with the risks that are involved, because we're not trying to claim this is a riskless product. There's definitely risks involved, but we're happy with where we've kind of placed those risks, and we're doing it for good reason. So there's a lot of information on the Twitter there, a lot of charts. We're also coming out with FAQs and different things ahead of our launch, which should be around January of the new year. So really looking forward to that. And yeah, you can keep up to date with everything on our Twitter account.
Cool. Thank you so much, Conor. Appreciate your insights into the market, everything to do with DeFi, stablecoins, Bitcoin. All the best in the markets and with Ethena Labs moving forward. And let's definitely follow up in the near future.
Yeah, thanks, Ashton. Great chatting. Thanks for having me.